Few investors have realized better sustained profits than George Soros. His hedge funds' annualized returns exceed 30% for over 30 years. Soros has been attributed to saying that if investing is entertaining, if you're having fun, you're probably not making any money. Good investing is boring. In other words, the most reliable stocks are the ones that are least likely to make waves in the market or headlines in the news. So, if you're looking for excitement, you've come to the wrong place, baby. Here, we're about as exciting as tax accountants. No fun allowed. Here, we're all about making profits. As an example, looking at the most recent 13F filing by Soros Funds, Soros has made three big moves. All three offer reasonable dividend yields from about 4% to 11%. This is well above the average dividend yield of the S&P-listed stocks, which come in at about 2%. The three stocks include Dominion Energy, Annaly Capital Management, and BP PLC. Of those three, my favorite is BP. So, let's get boring. The world's sixth largest oil and gas company is BP PLC. The company's revenues in calendar year 2018 was $303.7 billion. The net profit was $9.6 billion. Lately, BP has had difficulty. In the third quarter, the company reported $2.3 billion in profits, a 17% decline sequentially, and a 39% drop year over year. At about the same time, though, Brent crude was down 12.7% from its peak in April of this year. So far, BP has weathered the decline in commodity prices. It has the resources to wait out a low price environment. All the while, BP has maintained its dividend. The current annualized dividend of $2.44 per share gives a yield of about 6.67%, more than triple the S&P average. With a 92% payout ratio, it may be a bit stretched, but is sustainable long term. Soros's recent purchase of BP was a new position, totaling about 270,000 shares in the fund. Wall Street also appears to be upbeat about BP prospects. BMO analyst Daniel Boyd stated that we think BP is turning a corner after years flagging financial performance driven in part by oil spill payments, but they are dwindling. BMO expects strong production and cash flow growth, enabled by high margin projects to fuel dividend growth and improved returns. Boyd has a buy rating and has a target price of $53 per share. BP shares have received three other recent buy ratings, giving the stock a unanimous strong buy from the analysts' consensus. The average price target is $51.33 per share, indicating 39% upside. So let's now go to look at our charts. And we're looking at the 20-year monthly chart on BP PLC, the common stock, and the symbol is BP. For disclosure purposes, I do not hold any shares of BP at this time. And simply looking at the price chart, what pops out to me here is this. Wait for it. Fairly straight line there. Okay, we've bounced off that twice here in mid-2010 and then in early 2016. So that's a double bottom there. I'm not sure we're going to come all the way down and make it a triple bottom. That's a possibility because we're only $7.85 away. But keep your eye out. I'm thinking that the stock may bottom here somewhere above. And the reason I say that is looking at the MAC here. We've got this upward trend line moving there. That's a very favorable sign. Now, I would expect the fast line here, which is just barely under zero, to bottom someplace in there and head up. So watch for that as opposed to necessarily only trying to figure out the price bottom. Look at the MAC as well and follow the price chart. Now, the slow line is just barely above zero. I would imagine that's going to come down below zero here. So really, It doesn't have much weakness in the MAC, and that's another good sign. Here in the histogram, you see the same sort of thing, a nice upward trend. We're just starting that improvement here, and we have a little ways to go before we hit that zero line. It's not going to take maybe more than 1 or 2 quarters at the absolute most into the price rate of change. That looks fine too. Also a bottoming process setting here. Fast line wants to move through. I'm not sure if it's going to make it. May get reflected back. Doesn't really matter. That bottoming process is ongoing. Relative strength, we have a 39.96. That's relatively weak, but as long as it bottoms here in this area, maybe some initial signs of that, but as long as it does bottom in this area, start heading up to that midline or 50 line, that would be good news too. Stochastics looks like it wants to try to bottom as it did back, say, in 2015, 2016, maybe back here in 2009. So watch for that to bottom and the fast line to move through that slow line. Here, volume looks fine. And then the Williams, not quite bottoming yet. This is going to be probably one of the first oscillators. Wait for this to head on up to that 50 midline or even higher. That is going to be one of your first signs that the stock price really is improving. I think it will. It's just going to take a little bit of time. But as usual, conduct your fundamental analysis. And for today, this is ChewDog Charts. Pretty boring.